Smarts. All right, folks, now the market getting a boost late yesterday, a little bit early this morning from Jay Powell. Listen, it's pretty clear they're going to give us more rate cuts, but Wall Street's anticipating even more goodies. I want to bring in Jim Bianco, Bianco Research President. Jim, you know, people are reading into the end of QT as an immediate leap into QE. Is it just wishful thinking?
Yeah, it is. I mean, they said that they're going to end quantitative tightening, which means that they're going to stop reducing the size of their balance sheet over the next several months. Doesn't mean they're going to start expanding their balance sheet again. And for those that are pessimistic and think, no, they have to start doing QE because there's a problem, well, that's going to be a year away at the very, very earliest. And I don't even think they're even going to do it then. So, yeah, it is very much wishful thinking. They're just ending a program that they were going to end anyway.
Okay, let me ask you a philosophical question, right? Because we talk about the Fed and interest rates mostly through the lens of Wall Street, right? Axios had this today, no need for rate cuts for banks to spur deal making. Why it matters, who needs rate cuts when Wall Street is already ripping? And then you just had a post also recently, S&P all-time high, gold all-time high, silver all-time high, Mag 7, Bitcoin, U.S. home prices, and the question was, the Fed needs to cut rates more, or sort of an exclamation point. But is there, I think all these things have happened under so-called restrictive policy. So can we look at the Fed through a more of a Main Street lens?
Well, we should. I mean, keep in mind that the Fed, to use their terminology, works through the financial channel. By cutting interest rates or raising interest rates, they're trying to influence financial assets, and they're hoping then if stocks go up or down, that will influence the broader economy. And the point of that post was, what problem is the Fed trying to fix in the financial channel?
Right.
Everything is at an all-time high.
Right. It
doesn't seem like anything is being dragged down. It doesn't seem like the Fed policy is being restrictive, even though they say it is, because everything's at an all-time high. So I come back to the question, what are they trying to fix? Now, if you want to point to things like lower income struggles or the inflation rate or maybe house prices being too high and affordability, you can't fix those by lowering interest rates. If you cut interest rates and lower mortgage rates, my fear is that home sellers are just going to raise the price of their home, and you're going to be right back to the same monthly payment. It's just going to be more house and less interest rates.
So we are seeing the long yield now starting to pull back here. There was some question, whether or not that would happen when they began this newest part of the leg, the rate cycle. Here we are. We're here down here in the 30-year. So Myron and other folks, though, believe that this will have a positive influence, at least on things like mortgages. We've got pent-up sellers out there who wanted to sell for some time. I hear where you're coming from, but could this move the needle a little bit with at least the housing market?
Over the short term, it can. I mean, 30-year yields coming down. Mortgage rates will come down now. They'll come down next week. And then for those that are in the market to either refinance or buy immediately, that can be somewhat of a help. But if mortgage rates come down and stay down, look, the average home price in the United States is $414,000, and that is an all-time high. And that is the issue with affordability. We have an all-time high in home prices. Once home sellers start to realize monthly payments are getting cheaper because mortgages are coming down, like I said before, they're going to raise their price. And then your monthly payment is only going to come down for a little while and then go right back up. And that's the concern.
Let me ask you before I let you go. They tell me we got 30 seconds, but yesterday, 2 days ago, I had a guest who said that we're having this magnificent major breakout through a cup and handle, and that silver is going to go to 85. I think you might have him beat. I mean, if I'm reading this right, 75 or 100? In what particular time frame?
Well, you got to keep in mind that when you're talking about precious metals, those are very small markets, and they can be subject to big squeezes. A doubling in the price from here, if you were to look at where it's been in the past, is not that big a deal in the grand scheme of the last 50 years of silver prices. And we've seen it go at this point. What I'm trying to say is, yeah, I think silver prices could go up and go up a lot, but I don't necessarily think that has a broader economic implication. Right. It's more about a technical thing with silver. And yeah, I think over the next several months to answer your time frame question.
Well, I tell you what, my man, if that happens, I guarantee every bar you go into in America, someone's going to sing you a beer. All right. I'll sing you in no
a silver cup.
In a silver cup. Love our conversations. Thanks, Jim. Appreciate it.
Thank you.
All right, folks, here's the question. Is the